Hey guys, how we doing today? Happy Sunday out there. Welcome, welcome. Special edition here. Hope you had a good Halloween and everything. And I just wanted to share something real quick with you. Every week we send an email to customers. It's called Notes from Jazz. And so I wanted to read one off to you, show you kind of what we talk about in there, see if it's something that maybe you guys can learn from or something you like. And I'm sure you'll learn something different that you probably didn't see. I just kind of want to give you an insight to it. So hang back for a little bit, grab a drink, and let me read a little something over to you. Here's what it looks like, by the way. If you're one of our customers, you go in, you can see the archives there. You can actually just click on previous weeks and see some of the things that we teach. And so I'm just going to read off one of them to you here today and see what you think. We're always looking for improvements or ways to kind of adjust this thing here. So what I'll do is just get right into it, and I'll share some of the stuff with you here as well. I'll show you the charts and stuff so you can see what's going on there. So here we go. It's a little bit sort of thematic this week, right? Because it was Halloween, so I got a little carried away. Here we go. If our Halloween branded logo didn't scare you, then the market likely raised a few goosebumps this last week. Almost in perfect unison, the markets attempted to spook you one last time before the Halloween break as well as Election Day. In this special Ghost Notes from Jazz, we'll dive deeper into all that is sure to haunt even the bravest of souls. Who got that, by the way? Did anybody hear that? The Ghost Notes from Jazz? Huh? Where's my musicians? Right? What's up? All right, here we go. Anyways. Back to the letter. In a week where the S&P historically averages a gain of 1%, it lunged lower in a devilish display of disrespect to the bulls. For the election goblins out there, it also ranks as the worst week before a presidential election, darn near twice as bad. And what I'm showing here, I'll just say it. My ghostly, geeky market historians will note in the table below that the previous record was set in 1932 when the S&P fell 2.96% ahead of the election of Franklin Delano Roosevelt. So right here, minus 2.96%. What we're doing is just showing in the Notes from Jazz the week before every election that we could pull back. Not only what did the markets do the week before? You heard me reference the 1%, positive 67% of the time. So we're just putting that in there. And then off to the right, I included the winner as well. So just kind of sharing that data with you there. Okay. Now, we don't want to frighten the children, so let me spread some of the not-so-spooky news. If you look at the table below, the market did buck the trend by losing over 5% in a week where it normally gains 1 or averages a gain of 1. But you will notice that the Monday and Tuesday of election week, the market does offer up a small average bounce of 1.06% on average, and it's been positive 87% of the time. So what I'm showing here was the Monday and Tuesday. So upcoming, right? Tomorrow and then Tuesday as well, if you're watching this today, Sunday before the election. So we've got Monday and Tuesday of the election week there. What I showed you was how the markets performed only in those 2 days, right? As a combined performance. And then, of course, the winner taken over there. So you can kind of see mostly positive, couple little small down moves in there. I think the biggest loss was 0.35%. So it's not known for being as wild to the downside as most people expect. So hopefully that puts a little clarity as to what's going on. We'll see if this time's any different. Everybody says this time's going to be different. We'll see what happens. And of course, we don't know the winner just yet. Median gain 0.54%. So there you go. Anyways, two of those times that the market was lower was when the incumbent won, and it was only slightly lower in 1988 when Bush beat out Dukakis. The original Bush beat out Dukakis. We only lost 0.42% in that election there. All right, so just pointing that out. I'll continue to move on here. Okay, back to the market this week. There is more than just the election worrying investors out there. One of the more pressing topics relevant to the election is the concern of civil unrest, which the market doesn't really care about and didn't really care about until Walmart announced last week it was removing all ammunition and guns from its stores. While this was good for the manufacturers like American Outdoor Brands, those are the guys that make Smith & Wesson, by the way, Stern Ruger, RGR is a ticker symbol, it did play a small underlying role in the decline this week. So it was a major focus last week, and I did want to point that out because that was some news events that happened earlier in the week. All right, the other main reason was a sharp spike in COVID cases, which some of you will just think is likely flu reports being counted as COVID, and others will think it's another wave of the virus. The beauty of this is the market doesn't really care what you think. Investors responded to Germany's decision to enter lockdowns again, and France, which followed suit shortly after. What I did is I plotted on the chart here. We've got France coronaviruses by day, we've got Germany, and then we've got U.S. coronaviruses. I was plotting the viruses by day. Down here you've got Germany. In purple you've got France. You can see the U.S. is probably now over 100,000 there. So I mean, obviously this. Call it what you will. I know there's going to be arguments on both sides. They're like, yeah, but how many people is that, the flu or whatever? But I mean, it's what it is there. Hey, they even closed Disneyland Paris. Well, aside from a few days around Christmas, for some reason, they decided to keep the Paris open. I'm not sure what happened there. All right, so in this chart here, we share a spike in the France and Germany daily cases per day. It doesn't even come close to the U.S., which is also shown in blue there. By the time you read this, the data will likely have pushed over 100,000 cases per day. That seems to be a number that people want, and so reality or prediction becomes reality in that case. So we go on to say, while case counts make for a good headline, one thing you can do is look further. And see how people are actually changing their day-to-day lives. What we did is we took a look through all of your cell phone data to see how mobile you are compared to before. We also looked to see where you're going and looked for any changes. Good old Big Brother coming in here. Here we go. Also keep in mind that most public retail companies report earnings at the end of earnings. Oh, no, here we go. I went too far. The first thing we notice, which I'm showing on the screen there, is that you're starting to travel less to retail locations and general recreational areas that you might have been more comfortable to visit in days past. It should be noted that some of this could be attributed to the colder weather. So if you look at the chart here, we're basically plotting the day-by-day mobility of your cell phone. Oh, thing on. To see how you're actually traveling. And what we're finding is that as the cases are rising, you are less likely to go out. That's what Google's telling us anyway, so kind of interesting there. What's the takeaway? Keep in mind that most public retail companies report earnings at the end of earnings season. We're in the beginnings of earnings season right now. And so if this trend continues, you could expect retail companies to comment negatively about the lower traffic in their stores. So that was the first bit of sort of Big Brother data we were sharing. Next, we took a look at the grocery store visits, and we noticed that there's not much change here. Maybe that makes some of the recent pullbacks in Kroger, Walmart, Target, and then that recent IPO, Albertsons, that went public, maybe makes them attractive. Grocery store and pharmacy mobility trends, meaning people visiting, going to and from, actually not really changing there. So those aren't as affected. If you're looking at those stocks that are pulling back with the stock market here, you go, well, the traffic is still good. They're still going there, so that's not scary there. All right, moving on, we noticed that you are also starting to visit work a little less often. Given that initial jobless claims ticked lower last week, we would have to assume that some employers are just suggesting that it's safer to work from home because jobless claims actually ticked lower. Still very high, but ticked lower. This could be just a small downtick on the radar, but it's also one of the more interesting trends that I'll be keeping an eye on if you ask me. So what we saw is just a break below the recent trend of people going to work. There's naturally dips over the weekend, which you're seeing on the charts, but now we're starting to hit that new low again, which is kind of interesting because that's Friday's data. That's not over the weekend. This is currently the weekend there. All right, finally, we thought, let's see if you're really staying at home more often. If your visits to work are actually less, are you going home? Unfortunately, it does not seem that you are starting to, or fortunately, it does seem that you are starting to stay home just a little bit more over the last week. You can see the spike here just over the last week and a slight change in trend. Now, is that you're preparing for the big Halloween celebration, or is it that the virus news is affecting your normal mobility trends? This is one to watch as well. I think this one's really important because as more people start to stay home, especially around the holidays, how does that affect shopping? How does that affect you going out and Black Friday shopping, for example? A lot of that's going to be online this year. And then I just wrap it up by saying, okay, that should be enough to get you thinking. Have a great and safe Halloween there. So kind of the cool stuff that we like to point out in our Notes from Jazz. And I just thought this would be a fun one to share since it's not too specific on stocks and stuff. I can't do this all the time because sometimes I get real specific about different performance and positions we're adding and stuff. But that's a quick glimpse into how we update customers on a weekly basis. And I figured since it's Sunday, maybe you learned something there. The data is all public. We pull it all from the Google mobility trends around the country there. So they're watching. And there's a change in how you're navigating your day-to-day life due to the spike in the virus there. That will be sure to impact the economy going forward if that trend continues. So we're going to keep an eye on that. But anyways, that's all I wanted to share with you. Just hanging out here on a Sunday doing a little work. I thought, hey, let's put something up for them I appreciate you watching. Have a great rest of your longer weekend this weekend with the extra hour, and we'll see you tomorrow.